Welcome, you're watching BQ Prime. I'm Tamanna Inamdar, and stock of the day undoubtedly is Honasa. The company that listed fairly recently has been on a tear. In its stock price is nearly 20% up on trade today after stellar Q2 numbers and very positive reports from brokerages. But what are the challenges that they face going ahead? The makers of Mamaearth are in a highly competitive business. What's the plan going ahead? What is the guidance? To speak on this, I'm joined now by Varun Alagh, Chairman and CEO of Honasa Consumer. Varun, great to have you on the show. Thank you for speaking with us today.
Thank you for having me on the show.
All right, Varun, let me begin with your numbers, which obviously we've seen a very robust Q2 year on year. And if I look at it in terms of H1, the first half has been good. Your profits have nearly doubled. Your revenues up 21%, EBITDA up 53%, and margins up 8%. In fact, your PAT is up 94% when I'm comparing year on year. If I look at it sequentially, do you think that Q1 has been a little tougher and you've seen a big change in Q2, or what are the factors in play behind this?
No, I think our business should not be seen sequentially. It should be seen in year-on-year basis itself. Because it being a business where there are different levers which take time for you to structurally land, like distribution expansion, etc. As well as there is at a quarterly level there might be some seasonalities, but at half levels, half one, half two, there is minimal seasonality in the business, but it should still be compared to last year, and that's the better way to look at our business.
Okay, so compared to last year, I'm just going to talk about one factor, of course, which you had an ERP switch in Q1 that impacted your offline channels to some extent. Has that blown over now? Can you give us some idea there?
Yeah, it's actually our ERP implementation happened in last year, June. So this is in Q1 of 23 in June. And because of that, some of the base from Q1 got shifted to Q2, and because of which Q1 growths look much steeper and Q2 growths are not in line. But if you look at H1, that's probably the better way to look at how our structured growths are coming in.
All right. Let's just move beyond numbers to strategy. We have seen Mamaearth as the dominant brand, though, of course, you have other brands which are now increasing in acceleration. Can you give us an idea of the revenue mix? How much of it is coming from Mamaearth right now, and a bit of an offline and online breakup?
So Mamaearth continues to be the core of the company. It's the central brand. It is also the largest brand. And Mamaearth entered the top 15 beauty personal care brands as per the latest Jefferies and Euromonitor data which has come out. And I think we're very excited about the growth prospects of that brand, because that's a very, very versatile and wide brand which is there in many categories. So its ability to grow and capture share across categories is very high. For Mamaearth, we have about 40% of the revenues coming from offline and 60% from online. And this offline is a business that we have built only in the last 3 years, and it's a very fast-growing business. So we are looking forward to seeing how we see that distribution expansion. We've also gained shares by 50 basis points in shampoos and 100 basis points in face washes. So we'll continue to look at doubling down on gaining shares. Our other brands are also doing very well. They are in fact much younger, less than 3 years old, but they're growing at breakneck pace. We've demonstrated by getting Dr. Sheth, Aqualogica, and Dermaco all into more than 150 crores club that the company has ability to build and scale more brands. And in fact, Dermaco is now more than 350 crores in ARR and just 3.5-year-old brand. And we see a lot of potential for all of these brands to also grow.
Of the revenue mix, what is the dominance of Mamaearth?
Mamaearth continues to be, the majority driver as of now. But over time, of course, as the other 5 brands continue to scale, and I think contributions is just an outcome. All of the brands need to continue to gain share is what we will try.
Sure, of course. But if you can give me an idea of the current picture.
Yeah, so current picture, still majority of the revenues, and more than 2/3 are coming in from Mamaearth itself.
Okay, okay. So more than 2/3 is coming in from Mamaearth right now. Now, in terms of new categories and new launches, what is the pipeline looking like? What are you thinking in terms of strategy? You already have one big mother brand, pun intended, which is Mamaearth, which has become sort of the recognizing factor and the personality of your brand. What is the plan in terms of expanding? Do you want to diversify to more product categories? Do you want to add more brands? And what would be the pace of that?
So I think we've done a lot of that over the last 3 years. And as we see the beauty and personal care landscape, and there are three axes on which that landscape can be divided. And one is the price axis, and where you could either be in the mass premium masstige space or be in the mass space. And I think all of our brands currently are all in the mass premium and masstige space. And we haven't evaluated the mass space till now. And that is a long-term opportunity that potentially the company has. But from a categories perspective, most of the BPC categories like skin care, hair care, body care, baby care, and we are present in. And we have recently entered into makeup as well. And I think that's an area where we can have potentially a lot more play over years. But from categories perspective, we are very well covered through our 6 brands. Right? And even from a propositions perspective, from natural and organic in Mamaearth to a dermat-driven proposition in Dermaco and Dr. Sheth to a hydration-driven proposition in Aqualogica and to a Ayurvedic proposition in Ayuga. I think we have got most of the propositions covered. But we are a very consumer-oriented company. We keep looking for consumer trends as to what is consumer looking for, how is the global beauty world shaping, and what is it that is going to pick up in India next. And accordingly, we keep shaping our innovations and brand propositions.
So any specific number of brands or categories that you want to add, anything in the pipeline that you have which you can share specifics of? Are you going to dip your toe into the slightly premium category?
So no such new news as of now. As soon as we have it, we will surely come forward and share with you.
Okay. I want to get your outlook, Varun, on the consumer pattern of this business. Now, BPC, very, very competitive and seriously competitive category, and not a very loyal consumer base. I mean, on any given day, I might use a cream from somewhere, a hair product from somewhere, and I can switch next month. Do you feel that is the biggest challenge, or are you managing to build that loyalty?
I think firstly, we see that as an opportunity. The consumer has been using one type of product for far too long. And they are now looking for better products, better innovations, better propositions, which are in line with what the international consumer is getting globally. And I think our company is providing those kind of products at reasonable prices in India, and are providing subcategories which the consumer is looking for, are providing ingredients that the consumer is looking for. And so honestly, all that switch that happens to us is actually a great switch. And our quality and product delivery is so superior that once the consumer switches, right, we are very confident that they would continue to use our products.
Is it a challenge to ensure quality considering you're outsourcing manufacturing? And a lot of companies in the BPC space are outsourcing manufacturing and then working on branding. Can you give us some clarity there on how you ensure quality?
So I think, given that we started this journey as a baby care brand, as parents who are building products for their own children, and quality is something which is inherent part of our value system. And it's a paranoia. In fact, you talked about Ghazal. Ghazal is the chief innovations officer who looks at everything around R&D and product quality, right? And she's so paranoid about it, right? That I think we have far more aggressive quality processes internally than anyone else out there. Right? And we put, after all of those processes, and everything has to pass the Ghazal test. So she's the one who tests everything. to ensure that what goes out to the consumer is something that meets the most crucial and critical benchmarks. And so I think as long as you have that paranoia and DNA within you, and you'll make sure that you justify it.
No, absolutely. I'm sure the guzzle test is something we'd love to talk to her about next time. But my question, Varun, is specifically as you're expanding, as you're adding on brands. So two-part question. One is, how will you ensure that quality? And secondly, do you think it dilutes what your brand stands for? Everyone knows or knew Mamaearth as an alternative for baby care. Now you've gotten into pretty much a whole wider expanse. So what is now the brand strategy? And what does this brand Honasa stand for?
Honasa, of course, is a company and it stands for beauty with a purpose, right? Which is what all our brands stands for. So each one of our brands is a why-based brand rather than what-based brand. And it doesn't stand for selling a product. And it stands for existing because it is challenging a certain norm. And Mamaearth stands for and exists because it is challenging the toxins which are found in personal care products. And it is providing made-safe certified products which are free of harmful toxins. And that becomes the big war cry for that brand. That is the reason why it exists. And that reason allows us it to exist across categories. Because when we had launched baby care at that time, consumers only told us that we want such natural toxin-free products in our face care also, in our hair care also. Why should we not be using those kind of products? So that gave us that guidance. So our consumers only guided us, right? That we need to be available in different sort of categories, and they have loved it when we have provided the right kind of product to them.
All right, last question before I let you go, Varun. What has been the short but volatile journey as a listed company so far for you? On listing and a week after, the stock was drubbed, and there were a lot of questions about valuations, about competition, etc. Then you had a few positive reports. Today the stock is 20% up, and I don't want you to comment on today's rate, but what has been the journey for you from a company which didn't have to face this level of scrutiny to one that has to look at the stock price of the day?
I think for us, we would rather be married to the long-term outcome of this company. We are in this for a very long term. Both of us are fully committed to building this into a really, lasting organization, and which not only gains the biggest beauty personal care FMCG title in India, but also takes it to the world. And over decades.
But did you have a few sleepless nights when the stock was drubbed in the first week of listing? Let's be honest. I'm asking you honestly.
No, it's something which is the only thing which is in our control is to do right by the business, to do right by our brands, to deliver value to our consumers. As long as we are doing that, and in the long term, I'm sure investors will value that as well.
All right. Making consumers happy and making investors happy are two different things. And I suppose you're going to work on doing both, obviously. Thank you so much, Varun Alagh, for speaking with us today. That was Varun Alagh, CEO of Honasa, a company which is in focus today after pretty robust Q2 numbers, the first set of numbers which have come out since their listing, and of course, brokerage reports giving it a thumbs up.